Hello traders, this is a live trade recap trading the Top Gainers trading plan. I took 3 trades this morning. We're going to go over everything in just a moment, but first let me play the intro. If you've already seen it, just fast forward about 3 minutes and you should be up to speed. Here it comes. Welcome to Trading Armor. My name is David, and as of the recording of this introduction, it is August 15th, 2022. I've been actively trading the stock market for over 2.5 years now. I'm going to use this introduction for many videos, so check the date of the one you're watching right now. It's probably much more recent. If you're a returning viewer, welcome back and feel free to skip over this intro. But if you're new around here, thanks for stopping by and allow me to introduce myself and give you a few reasons as to why you may or may not want to stick around. My journey as a trader began in May of 2020, and like most new traders, I quickly realized that trading is not as easy as most people make it out to be. In fact, it's downright difficult. Luckily, even when I was new, I approached it with caution, which kept me from blowing up my account. Eventually, I realized that if I had any chance of being a profitable trader, that I needed not only a good strategy, but a well thought out and written day trading plan. I also needed the discipline to trade that plan exactly the same way every single day. I get my discipline from forward testing all of these trading plans by taking 100 trades or more, collecting the data, and from that data I can produce statistics. Once I know my statistics, I can go into the market with some expectation of what's going to happen, and that makes it very easy for me to stay disciplined and stick to my plan. We've already proven a small cap trading plan profitable after taking 100 trades, but we also proved that plan was quite tedious to trade. So right now, I am currently forward testing 2 new trading plans. One of them is for active day traders, people that want to trade the market every single day right at the open. That plan is called the Top Gainers Trading Plan, and the other plan is quite different. Both of them can be traded individually or simultaneously. The other plan is for people that may not be around during market hours or just don't have any desire to sit in front of charts all day. That's the SPXL day trading plan. Now, both of those trading plans have their own playlist on my YouTube channel, so you can check those out. Now, it's important to know that I am not a professional trader. I have absolutely no formal financial education. In fact, my first degree is in music, and later on I went back to school for physics. Yeah, physics. And I just recently finished a master's degree in medical physics, and I know all of that might sound really strange, but apparently I have a curious, creative, and problem-solving mind, which allows me to approach trading in a novel way. So stick around if you'd like to watch me try and apply my odd educational background and unique life experiences to the very unusual world of the stock market. Thank you. Okay, so now we can watch the trade video from this morning, and we'll talk about the trading. Hello traders, this is a live trading video. Let me just make sure that the mic is not muted. So I started out trying to make a live video, but the trades just went on way too long. So that's why we're doing this recap so that we can speed everything up. And let's just, I'm trying to get rid of this volume bar. So there we go. So I can fast forward. So this is the market open. I always like to restart Webull right after the market opens to try to help the top gainers list refresh. I've noticed that the period between 9:30 and 9:35 is kind of when the top gainers list is, or at least I would say between 9:30 and 9:35 is probably about the duration that the top gainers list needs to completely refresh and update itself. It's just the way it works. I don't know why it is that way, but that's just what I've noticed. So anyway, what does that mean? I don't think it means much for us. We're just going to keep on refreshing and adding ticker symbols on the chart page, and whichever ticker symbol triggers our entry first, that's the one that we trade, and we focus on that. Trader discipline is everything, and that's one of the benefits of that type of a trading strategy, or trading plan really is a better word for that. So I did almost make a mistake, the same mistake that I made yesterday by putting SMAR on the chart page. Notice the volume is very low on that. I have since yesterday, I set a, well, actually it was before yesterday, I should say. I think it was about the beginning of the week, Monday or Tuesday, I set a low volume limit of 250,000 shares or more, which doesn't sound like much, but at the open, you know, right at 9:30, it takes some time for the volume to build. So I want to see at least 250,000 shares or more. And the whole point of that is to avoid stocks with super low volume that are on the top gainers list, because it's very easy for a stock to move up 10, 20, 30, 40, 50% with just a few shares traded if the volume is light, because the spreads can be really big. So anyway, you get stocks like this, PED with 2.7 thousand shares being traded. What else is there? And then NCNO with 57,000 shares traded. So you have to avoid stuff like that here at SMAR, as I was saying at the beginning, with 17,000 shares. So it just, for whatever reason, I screwed up putting SMAR on the chart, but I realized it, before we started to trade it, and removed it. So there was the alert for SMAR, and then when I got here, I said, wait a minute, I'm about to make the same mistake I made yesterday, and I checked the volume right here, which is not ideal. It's better to just check it from the screener before you even put it on the chart. So, but anyway, at least I saved myself from trading outside of the plan inadvertently, which is really almost as bad as doing it on purpose, because there's such a small margin of error for day trading that even if you have a profitable trading plan, if you make too many mistakes, I would say as many as 2 or 3 mistakes per 100 trades, that plan could become unprofitable. Or I guess the results of it, will be unprofitable. It's not that the plan is unprofitable, it's that you're making mistakes trading the plan. So it's very important to try your best to trade the plan perfectly. And that's why it's also a good idea to, whenever you start trading a new plan or a new idea, that you start with very small position size and you collect 100 trades, real trades worth of data before you increase your position size. Because no matter how good you are at trading, I've been doing this already for 2.5 years. I feel like I'm very competent at executing the trades, at following plans. But whenever you start to trade a new plan, there's always going to be new things that pop up that kind of throw you off. And that's already happened to me, I think 3 times in 50 something trades. So we're already kind of at that limit that I'm assuming, is the margin of error for a profitable trading plan. Of if you make more than 2 or 3 errors in a group of 100 trades, you can turn that profitable system into an unprofitable system. So anyway, let's move on to the stock that we did trade, which was drug. So you'll see that DRUG did pop up here on the top gainers list. I think as soon as I pulled it up on the chart, it's already triggering us to watch it for a trade. Now, once that happens, that's it. We are done looking for ticker symbols. We just focus on that one ticker symbol. And the odds of you picking the right stock to trade, meaning a stock that's actually going to continue in the direction that you're trading, are pretty low. And I don't think there's any real way around that. I think even if you have a very strict criteria there and you do everything exactly right, the odds of the stock going in your favor are still very low. And that's why you need a risk management system that is going to make up for a low win rate. And that's what this is. We are trading all or nothing 3R. So every single win is 3 times one of our losses. And generally that works out pretty well. But right now this plan is struggling a bit. I'm going to go over all of the results in detail on a video that I'm going to release on Sunday. So watch out for that. But for right now, we're just going to talk about this drug trade, which that sounds really weird to say that, but it was a trade with the ticker symbol drug. And right now we're just waiting for the pullback and the first entry. So let's just go to the first entry here, which is as soon as a 1 minute candle makes a new high after a pullback or even a double top. But in this case, it was a pullback. It was just a 1 minute candle pullback. But what you'll often see with these stocks that run with a lot of energy, I'm just trying to go right to the entry so you can see the entry live. The next 1 minute candle, which is just a few seconds away, is going to break out over the top of this one. As soon as it does, I trigger my hotkeys for the entry. So there's 228. I think 228 was the high of this candle. So as soon as I saw 229, I'm not sure on that. It might have been 220. Yeah, it was 228. So it's all 229 or anything higher than 228. I trigger my entry, and we got in at 228, which is exactly where I want to. And I did debate for a second where my stop loss should be. But whenever you are trading an entry like this, which is this still falls into my version, my definition of an ABCD pattern. I have a video explaining that. And that's what this is we took the first entry given after a pullback in an ABCD pattern. Now, the rules for stop loss with his trading plan is to generally to place it below the low of the previous candle that you entered on. There are some details where we need to go below a consolidation area, so the stop loss could be lower. But in a move like this, the whole point of this entry is thinking that this thing has so much energy, so much momentum, that it's only going to give you a brief opportunity to enter, and that's this candle right here. After this candle is done, and then we wait for some confirmation that the price is going to move back up by waiting for this 1 minute candle to break out. That's our entry. And then the hope is that this thing just rockets up and hits our 3-hour profit target. So that's why the stop loss goes just below the low of this previous candle, is because, well, if this thing isn't that strong and it is weak, it could flush down and stop us out. And having a wider stop in that scenario, I don't think is a good idea. And you'll see that it wouldn't have made a difference if I placed the stop below here or here, other than it would have been a much larger loss and harder to recover from. So let's just fast forward a little bit, and we'll see that this thing did show some strength, but it just went up to 240 and then came right back down and stopped us out. So, and then eventually it does break the low of this candle, and it would have stopped us out even if we would have had a wider stop. The other issue with having a wider stop is that means the profit target is that much further away. It has to be 3 times the risk. So that would have basically made the profit target somewhere around 270, and the chances of it hitting that are even less. So anyway, sorry for the noise outside. There's some landscapers working right now. Let's fast forward and look. We're going to see trade number 2. So once we get stopped out of the first trade, I'm waiting for the next pullback to finish, which is finished when a 1 minute candle makes a new high, and that is our next entry. All of this is according to the trading plan. And the whole concept of the 3R all or nothing trading is that if this trade worked out, this would have been a 3R trade. That first trade was a minus 1R loss. We would still be up 2R at the end of the day. But you'll see this trade also eventually stopped us out. Looked hopeful for a little while and then stopped us out. We have to stick to the plan and just follow the plan. We can't take profits early. It really wouldn't make sense anyway. If I would have taken profits early, we would have had to stop trading, and I wouldn't have made back that loss anyway. I just would have made a partial back of that loss. But really, the thing that's going on here is we have a trading plan that has very well-defined rules, and I just went right past the third entry, I think. Yeah. So we have a trading plan with well-defined rules and entry criteria, and what we're trying to do right now is just get to 100 trades, collect the data, find out if it's profitable. So that's why, I mean, you shouldn't be deviating anyway. No matter what your trading plan or trading system is, there should be no deviation once you're in the trade. If you are deviating, that means that you don't trust your plan, you haven't tested your plan, you don't know your plan's statistics, and that's why you can't follow it. So the only way to generate those statistics is to stick to the plan for 100 trades or more and collect the data. And that's what we're doing right now. I think this, at the end of the day, we have now 55 trades. So that was trade number 2, stopped us out. And now this is trade number 3. This is our last chance to kind of be profitable on the day. And if this trade fails, then we just have a max loss day, 3 and out, 3 losses, and that's it. That's how we keep the losses under control. You could just keep on entering and just stack up the losses. You could get lucky, the next trade may work out, but the chances are that it's not going to, and you're just going to add to the loss. So that's why we just stop after the third trade. It's also much easier to stay disciplined when you limit yourself to a small number of trades, like 3 trades per day. The more trades you take, the more likelihood you have of breaking your plan and getting weak and getting emotional in your trading. So I've come to find out that 3 trades is kind of the magic number for me. And it also works out mathematically because, as I said, if my third trade works, it's a 3R trade, and hypothetically, we should still be green on the day. And if it fails, then we're just down 3R, and we could get that back in 1 trade, assuming the next trade works out. So this is trade number 3. Now this video is going to end early because I had a phone meeting around 11:30 that I had to get ready for, but we did get stopped out of this trade. I will show you that order. So it was a 3 and out day. Let me just go back to Webull. So you can see there's the third trade that we were watching. My stop loss, as you saw in the video, was at 199. We got filled at 196, a little bit of slippage. That can definitely happen with these volatile stocks. Let's check out the other stop losses where they were filled. So we set it at 204. We got 203, not bad. Here, 221, we got 218. But these, volatile stocks, you have to expect a little bit of slippage. And that should be, it's built into the statistics. We're tracking all that stuff to see if we're still profitable. So unfortunately, today was a max loss day, but the good news is we stuck to the plan. We didn't break the plan. We didn't go and revenge trade, try to make the money back and make a small red day into a big red day. So that's all the good news. The other good news is that we also collected more data, and I'm going to go over that data in a video that I'll make right after this one and release it on Sunday. So hopefully you learned something from this video. The idea is if you have a trading plan, first of all, you shouldn't be day trading unless you have a trading plan, even if it's extremely simple. This plan is pretty simple. It could be just something as simple as, well, I only get in if the price is above a certain indicator and you have a certain number of chances to take that trade, something like that. You need a list of criteria. You need a reason to get in. You need a stop loss and a profit target. You need to know all of that stuff well before the trading day begins. And then when the trading day begins, you just execute that plan. You don't think about, is this a good trade or a bad trade? You just see, okay, this stuff meets all of my criteria. My plan says I must take a trade when that criteria is met. You take the trade, you let the trade play out, and then you track the results, and that's how it goes. After doing that 100 times, you'll know whether or not what you're doing is profitable. And even if it isn't profitable, now you have some valuable data. You can say, okay, this plan doesn't work. Maybe if I change this or that about the plan, start all over again, do another 100 trades, maybe it'll be profitable. It seems like it's a time-consuming and difficult, grueling process, and it is. But look at how many traders are out there just trying random things, trading for many years, and they're still not profitable. And they're basically spinning their wheels. So anyway, that's my 2 cents on that. Hopefully it was helpful to you. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.